And welcome back to the Daily Trader, episode 2 of the YouTube show. We have today with us NebraskanGooner. Welcome in, sir.
Hey, thanks for having me.
Yeah, looks like you got a cozy setup there. You doing okay today?
Oh yeah, I'm wonderful. Just trying not to gouge my eyes out looking at the crypto charts today. How about you?
I think we're all kind of in the eyes gouging out phase of watching the market because I feel like everyone just is glued to the low time frame, charts, and I feel like it's worse than it used to be as far as just being obsessed with every single movement. Do you feel like that's changed since your early days in the markets?
I mean, the hard part is right now everything is pumps are selling off and dumps are buying back. So there's no you zoom out and you're just kind of like stuck in this little like median level on almost every chart, it seems like. So I see why a lot of people are getting caught on lower time frames, I guess, because of that.
Is it something? Are you surprised with ETH being 10% away from an all time high, and the ETH on chain market like has never been more dead? Is that something that you would have ever guessed would have happened maybe even just a year ago?
Yes and no. I mean, the thing is, right now in crypto, it's like everyone's fighting over scraps, and everyone like Aster pumped really hard, right? And then what's pumping now
Mhm.
like useless. You're not getting like market wide pumps. Everyone's like fighting over the next thing that's gonna run, and they're like it's like thousands and thousands of people fighting over like one seat in the round table, and so yeah, people are going to what's hot and what's new. They're going to BNB chain because that's new, right? They went to what was it like Bonk chain for a while, and like Matic chain for a while was like really hot. Like people are just going. It's just hot potato. Everyone's going for the next flavor of the week, and there's just so much. There's no liquidity. There's not enough liquidity to go around in the whole market. So yeah, it makes sense because Ethereum is has been around forever. And now everyone wants to find the new best hot thing, right? Like nobody's going for the old stuff anymore. Even we're seeing that recently with NFTs. Like there's I don't pay too much attention to NFTs, but I've noticed there's like new NFTs now going around. And will they hold their value? Probably not. It's just the next thing to, people are flocking to try to make the gains they were promised in crypto.
Yeah, you had Punkster and the NFT strategy meta there for like 5 days. It did run pretty. Actually, it was like a month, but it did run pretty hard up to like I think 300 million, and now it's like been cut in half. And who knows if it'll continue? It was the first time I've seen anything on chain with ETH run that hard in a while. So there was some hope for like a week, and now I'm like, well, that died. So
I mean, we're getting legitimate breakouts on assets that normally sustain that aren't sustaining. That's just the current state of the crypto market and the altcoin market. And it's like 1 out of every 10 will run. Do you take profit quickly, or do you try to hold and hope it's that 10% that's going to run? And if not, then you're round tripping 9 out of 10.
Well, give us, in case people aren't aware with how long you've been trading, kind of walk us through a background of like when you got into trading and kind of what markets you trade the most. I know we've talked at length about a lot of this stuff, but just for the viewers who don't know or aren't familiar with, your tenure in there. So give us a breakdown of that too.
Yeah, I mean, I got into crypto in 2017, and then I was obviously on Twitter, now X, and I just noticed that when the market started going down, all these accounts with tons of followers didn't seem to realize that the market was going to continue going down, and every dip was worth buying, until everything went to zero or whatever in crypto, like 80% drawdown, right? So I was like, okay, really weird. I guess I don't need to follow anyone on Twitter because no one knows what they're doing. So like, I guess I'm gonna have to learn this myself. So that's kind of what I did. I started learning market cycles mainly, like because market cycles, like how do you not get caught in an 80% drawdown, right? And how do you get into something before it does 1,000% pump or whatever after the 80% drawdown? So that's what I started really learning. I didn't just try to like learn charts specifically. I tried to learn the overall encompassing market dynamics. Why do people panic sell here? Why do buyers come in here? What's the psychology of this and things like that? Despair and denial and complacency and all that stuff. And you see it if you really learn the psychology of the markets. You see it in Twitter. You see it on X or whatever. You see people in the denial phase, in the euphoria phase, or the denial phase. It's going to bounce back soon. It's going to bounce back soon. Don't sell now. Don't sell now. Don't sell now. And it's like most altcoins have been in bear trends for over a year, for probably 3 years since like the 22 or whatever big pumps we had, most of them have been in high time frame downtrends for that long, aside from like Solana as one of the main ones and a few others. But I mean, it's just so I just really tried to learn the market psychology and everything. And then I started trading crypto. And that was good. But then I started learning stocks a little bit. And then you have a little bit difference because you have like opens and closes, and you have FOMC, which apparently affects crypto now too.
Right.
But you have all this other, you have earnings and all these things. But the main draw to stocks was just the no fees. There's no fees to trade stocks anymore in the US, which is really helpful, especially if you want to do any like low time frame trades or anything, right? You don't have to worry about the fee. You don't have to calculate your fees to be able to make the trade. So lately I've just been trying to do a lot of swing trading. It's a lot less stressful. It's a lot less time consuming, especially with kids and things like that. So, I mean, stocks have been great for swing trading over the last maybe 1 to 2 years. Crypto, not as much, unfortunately, because as we just talked about, a lot of round tripping and a lot of these real breakouts that would typically sustain in a healthy, strong, liquid market that just doesn't have the liquidity right now to support it, and everything's just selling off. So.
Yeah, and I like you said, stocks have been showing some of the same volatility that I thought crypto was showing a few years ago. It's been crazy. So it's been like the best of both worlds for stock traders because you have the no fees, but then you've got the crazy moves. I mean, if you look at stocks like Rocket Lab and Hood in late 2023, those were $5, $8, and now I think Rocket Lab is like 65, and Robinhood was like 140 not long ago. So it's been like crypto style volatility for those.
Open just went from like $1 to. Open went from like $1 to $12 or something crazy, and then Plug just did like a 4x or something off the low. So we're seeing these crazy straight vertical pumps on stocks that we thought we were going to see in crypto, and then so that begs the question: if you pull up like the Open chart and you look at the bottom of it and you see where it starts climbing just a little bit and then tanks right before the big spring, it kind of makes me wonder: okay, are we at that little upward thing before the last final nuke on altcoins before we really get some, springs on them? So if you really compare that to some charts, you could say, okay, crypto altcoins. I don't think we'd see market wide pumps like we have in the past, just because there's not enough liquidity. But maybe we're still 4, 5, 6 months out from altcoins really showing like that they can do like a 500% pump within like a month or something.
How much do you believe in the theory of like the crowded trade? Like, if it's hard to really judge this on X because you have like half of the crew saying one thing is certain, like, oh, everyone wants this, so it can't happen. But then you have literally half the app saying the exact opposite. So you're like, there's no consensus. Do you believe that like that's a valid theory anymore, or how do you gauge that in the digital media environment, kind of?
I mean, that's a good point, because it's like GME seemed like a crowded trade forever, right? But back in the bull run back in 2020. But of course, it just went up and up and up. So I like being early to the crowded trade. I don't like being late, because the later it becomes, the more, you start getting texts from your buddies about it and stuff. And it's like, how hyped is this? And how are people just looking for extra liquidity, or, is this just too obvious at this point? So it goes both ways. I mean, I think for a little bit, Aster there was kind of the crowded trade. Everyone was calling for $4. CZ was posting about it. But again, there's just not been enough liquidity to really sustain any of these moves. And we're seeing that even with the best FA right now, there's the moves just aren't sustaining. I think Aster went a little bit above $2, and now it's been dropping back. So that was probably a good example of a recent crowded trade. And it was kind of one of those that was like, realistically, like, I can see why people were so bullish on it at the highs, and why it could have very well gone higher and maybe should have gone higher. But how often do we just go, man, this is just so easy. Like, this is easily going to make a new all-time high, no problems. And you just feel so certain about it. And the market goes, I'm just kidding. I'm going to make you think twice. And the market just, it's just crazy, like, how often do you really feel, how often when you feel 110% confident about something and you're bragging about how high it's pumping and how well it's doing, does it actually keep going? Like, it's the ones are like where you're like, oh my God, I need to sell. This is going to drop soon. And then it goes up more and you're like, God, I really should sell this because it's definitely going to nuke. And then you're like, I'm going to take half profit here. And then it pumps 50%, just like the ones that you're cautious about and concerned about and nervous about are the ones that always take off. And the ones that you're like, man, this one is just going to do another 50% tomorrow and tomorrow and tomorrow. And it just looks so amazing. And then you're like, what the hell? Like, how did that catch me off guard? It looks, so.
Yeah, like I'm watching it every minute. I should have been aware that this might happen. I mean, that kind of leads me to my next question is, in all your years of being a trader, like how much of a battle for you psychologically has it been? And is it more so now than before as far as like everything is like a mental loss? Like you might be up 75% on a trade, but because you missed one exit, you're not as up as you could have been. Like, do you still battle with like the psychology of like, oh, I could have had more, and like it never feels like enough?
Occasionally, but most of the times usually if I exit a trade, I just delete the chart. Like I don't need to look at it right away because there's no point because I'm not going to FOMO back in. Now there's the times where like, let's say something's in a bear trend and I'm like playing like a bear market pump and it hits a resistance and I might set like an alert above that key resistance. I might close out, delete the chart, set an alert above that resistance. And then I get an alert. I'm like, oh my God, it broke out. Okay. I can get back in. But most times if I exit a trade, I'm just closing out the chart. So I think a lot of times on Twitter, I'll post something and then I'll post a drop on Twitter, right? I'll be like, oh, this altcoin's going to drop from 170 to 150. Bam, it drops. And I go, okay, there was a drop, boom, done. And then it bounces back to 170. And then people go, well, you were bearish on that one. And I'm like, I haven't looked at this chart in 2 weeks. Like I told you the for sure thing that I thought would happen. And then I completely wiped the chart from memory. I haven't looked at it. So I usually don't really try to think ahead of what I've already done and what I've just done. If I've got profits locked in, like I said, in crypto right now, if you are locking in those profits, you really can't feel too bad about it because 1 out of 10 might run, but the other ones have round tripped. So like Ethereum, for example, like just had a really nice breakout. It broke 4,445. It broke a really good level. Told me that the market should pump, that it should pump, and it did pump to like over 4,700. But it could not sustain that momentum. It dropped rather quickly. And that's one of those setups that should sustain momentum and you should see it go higher. So it's one of those that should be, a nice profitable one that just the market didn't allow. So you can't really think about it. You can't really think about it like that though, about missed profits and things. Like if you sell something at $1.50 and it goes $3, like, okay, next time maybe leave a moon bag or something or take measures. If you really think it's going to go, then you need to trust in yourself, in your confidence of these setups and hold these setups to completion. I think that's probably the biggest thing that people have regrets about and newer traders is they're not following their setups to completion. So they're like, okay, I've got this breakout here, this target's up here, but I'm selling halfway to there. And then it's going to target, and then the times like, so 3 out of 6 times, or sorry, that's 1 out of 2, I guess. So 1 out of 2 times it's selling halfway there. And then I'm picking and choosing which times I'm selling halfway. And that's just not a sustainable strategy because you're not going to be able to pick and choose the right times to sell. Like, if that makes sense, like if you're just guessing, like you just need to play them all to completion and maybe move like a stop loss to break even and just assume that this setup is going to reach this target 60 to 70% of the time. So you have to play that out and see it out rather than just trying to guess and being concerned about not realizing profits or, profits missed out on and things. So sell too early and it kind of ruins your psyche and you'll start to like try to compensate for that. So just play your setups out, trust your setups. If it's a good setup, then you should feel good about it and you should be able to let it ride.
Yeah, I agree. And I have a 2-tiered question now for you kind of on that same vein. Number one, do you think that the perception of what people view of as a trader has changed now compared to what it was when you first started trading? And number two, the second part of this question is, a lot of traders that call themselves traders now, they seem to have just like no concept of risk tolerance. And I mean, like, are you optimistic that like trading will always be looked at as a position, like a job you can have that requires a lot of skill and tactical ability like you've shown? Or do you think it's going to be looked at as something where like you just got lucky? So that's a lot of questions packed into one blurb there, but
I mean, I'd rather be lucky than good sometimes, sometimes it's all about luck, especially when you get started out. What was the first part of that question? Sorry.
I loaded that way too thick there. So the first part of that question is like, do you think the perception of what a trader is is different now than when you first started trading? And if so, what's different? And if not, why do you think that is?
I think trading is definitely becoming more of like a thing, whereas like 15 years ago, traders weren't like you didn't not everyone knew what a trader was. Like if you tell someone you're a stock trader now or crypto trader, they're like, oh, okay. Like 15 years ago, if you told somebody that, I'd be like, what do you do? So I
Yeah.
definitely think that it's becoming more like in the forefront as like a thing. But I it it's just a hard thing, and it's very stressful if you make it stressful, and it's not for everyone, for sure.
Mhm.
I mean, that's a really tough question to answer. It's just there's so much that goes into it. I think trading used to be like you could make millions of dollars in 1 hour, and you buy this crypto and you go get a Lambo, and it's like
Yeah.
you have to be a complete degenerate like that, and to make that insane of gains, you have to be in the market you have to get into the market at the exact right time, and you have to get out at the exact right time. Very few people can just go complete degen and not take one big hit that really screws their account. I mean that's the
Yeah.
biggest thing. Like I think risk management is underutilized and underdiscussed on Twitter, and that's why I always discuss the crap out of it, because inevitably somebody with a $10,000 account will see somebody with a $10 million account posting like a $70,000 screenshot of P&L, and then like, oh my god, I got to make more, so they'll take all this $10,000, put it on leverage, and try to make like a 20K trade, and then they lose all their account and they blow it, right?
Yeah.
Like, okay, but so maybe so you're trying to do a 300% gain on your portfolio, and this person just did a 4% gain on their portfolio, or a 2% gain on their portfolio, right? So like, you need to think about your portfolio in percentages, and if you grow $1,000 portfolio $200, and a person with a $10,000 portfolio grows at $1,000, you actually outperform them. You did a 20% gain, they did a 10% gain. You outperform that person, so you're actually doing better than them. You made less money, but you made more percentage of your portfolio, and you made your money work how you could better. So
Yeah.
I think a lot of people just go, I'm going to just degen on here, and I want to make more money. They see these big screenshots on Twitter. They see big money made. Like, so I don't like to share that stuff. There's no need for it on Twitter. We really should just be discussing charts. We should be discussing risk management, and we got and just trying to keep things realistic for people that are out there that don't know as much about it, right? Because it's just most people just make it gambling, and you make
Yeah.
it gambling, and even the best traders will still lose when they gamble, in my opinion. So anybody that gambles in the markets, again, it's just gambling. And why do casinos make so much money? Because gambling
People
is
gamble.
not a successful strategy for
Yeah.
anyone.
Well, and kind of to that point, have you ever had a streak where maybe you caught yourself being more of a gambler than a trader? And I mean, maybe even early on when you
Yeah,
first started. I mean, do you
100%.
still catch yourself in those old habits a lot, or have you pretty much weeded them out?
It can be hard because you really like I think the hardest part is you go really consistent. You're like, okay, like, dang, this, like, my account's up like 10% in a week or something. Like, damn, that's like really good gains or whatever.
Mhm.
But it may not be for some people. Some people think you need to make 100% gains every week. But if you can make it, anybody making gains on their portfolio is doing well, in my opinion. You make 1% a year, you're doing well. I mean, you're not outperforming inflation, maybe, but you know what I mean? Like, anybody that's making money is doing better than 90% of people, because 90% of
Right.
people lose money, right? So, hold on. It's very easy to get cocky and be like, okay, you've been going so consistent, and you're like, gosh, why am I not going bigger in these? Like, every trade I'm taking is popping 10% the next day, whatever, within a week. So you're like, man, I really should go bigger here. So you're like, God, I need to size up on this next trade because I've been going so consistent and steady, and I'm making nice gains, but I really should hit a home run here. And then you size up on that next one, and it's the exact same setup as all the other ones, but this is the one that doesn't work, right?
Yeah.
It's the same
You
in the
backload
casino
your
too.
risk.
You can be playing blackjack and you're just on a roll. You're on a roll, and you're like, God, I've won like 15 in a row. So you size up a little bit, and you just keep winning. You're like, man, I need to size up more.
Yeah.
And then your 3 hours of playing blackjack and tripling your stack, and now in 10 minutes it's cut in half, or you lose it all,
Yeah.
because again, it's just gambling. So if you don't have a strategy, then you're just a gambler. Even like professional sports bettors, and I don't know if people really understand this, because people will be like, well, there's professional gamblers. Yeah, there is professional gamblers, but they all have a strategy. They all have safeguards. They're all looking for the best value. Like, if you're a professional sports gambler, you're looking at 5 or 6 different bookies for the best odds. So you're giving yourself a slight advantage there. And
Yeah.
then you're only taking like certain bets that meet certain criteria, right? So they're not just like specifically going, oh, I just think this team's going to win tomorrow night. I think this team's going to win tomorrow night. I think that, like, they're finding like an edge. Oh, that quarterback has a hamstring injury. I'm going to bet against his passing yards or his rushing yards because he's not going to run as much tomorrow. So like they're giving themselves some kind of advantage. And so in the markets, you need to do the same thing. You need to find some sort of advantage for yourself, and you need to stick with that advantage. And you can't start doing other things that give the house the advantage back. Like, you have to be strict and you have to stay with that advantage 100% of the time, because the one or two times you don't stick with your strategy, you don't stick with your house, with your own advantage or your own edge, then the house is going to win. And it's inevitable. It really is inevitable. I mean, I can't stress that enough.
Do you think it's kind of striking the disparity? So like we talk about gambling and what you're saying being a very tactical disciplined trader. Like there's such, in my view, there's such a wide gap of discipline required for one. But then, I mean, literally gambling is like just risk it all. Like there's no discipline required there. So like the gulf from gambler to trader, I feel like is wider in terms of discipline required than people realize. Do you think that's true?
Oh yeah. I mean, they're gambler and trader are completely different. There's absolutely no similarities.
But yet people think they're the same, even though it's strange.
I mean, yeah, my wife has said before, like, are you just sitting there gambling all day? And I'm like, no, like, you know, she's like, what do you do? Like, what do you do? I don't get it. And I'm like, exactly. Yeah, I mean, I just can't say it enough. Like, there's just gambling and trading are completely different. And if your portfolio is going like this, a lot of sharp ups and downs, then that's 110% gambling, and it's likely to dive bomb at some point. And like, if you have a leverage account, obviously not like this isn't advice or anything, but like if with a leverage account, I think you should be very, very periodically, like very religiously taking profits out of that account, because it's very easy to lose that. Now, is there a time and place for gambling? Sure. Can you say, all right, I'm going to take $100 today. I'm kind of bored, or the market's going crazy. Like, I'm just going to take $100, turn up the leverage to 125, and just see what the hell I can do with this $100.
Yeah,
that's really fine.
Why not?
Like, I don't have issues with that. I think that's okay as long as you don't make it a habit with large amounts of money. Like, you know, you've made some good gains over the last few weeks. You're kind of like, don't really see any trades, but the market's volatile and you just want to go crazy. Fine. Like, that's totally okay. Get it out of your system, whatever. But people using like 100x leverage with their whole account, like, that's just, I mean, you just have to assume that you're going to be wrong 70% of the time, or 30% of the time, right? You have to assume that you're going to be wrong 30% of the time, at least, at a minimum. If you're doing really well, you're wrong 30% of the time. If you're doing pretty well, you're probably wrong 50% of the time, and you can be profitable being wrong 30% of the time, right? Or maybe even less, depending on your strategies. Like, if you are a very, very high time frame swing trader with very good conviction, you can be wrong. You can be wrong plenty. You can have only 2 or 3 trades out of 20 that work out, but they're all do like a 20x, right? Because you understand bottoming patterns and things like that. So you're getting insane risk to rewards on these. Sure, 10 of them don't work out. 10 of them you lose 50% on, but the other 3 or 4, they all do a 10x, right? And then you're profitable. So there's ways to be profitable with like percentages. Winning percentage doesn't necessarily matter, but you just have to assume you're going to be wrong. And if you think you're going to be right 100% of the time, then there's inevitably going to be a time where you take a big risk and absolutely get smacked back.
I mean, so I guess the way I can rephrase it in almost a different question entirely is, do you think people maybe are in love with the idea of what they think trading is as a job, when it kind of goes back to what we were saying earlier, when really it's a lot of work and a lot of discipline? Do you think maybe there's this giant misconception about, oh, I can make this work as a living just because you had 3 or 4 lucky trades in a row?
Yeah, good point. I mean, you definitely you need a long-term back test. You can't really back test strategies very well, but you need a long-term testing of strategies. Like some of the pros I've talked to, they're like, you need thousands of trades. Like, you need thousands of trades to really have a good grasp of if this is successful or not. So if you have 100 trades and you think you're going to make it, then you might not, right? Because you don't have that full backlog. And not only that, but if you have 100, like, you just need that experience and that discipline. You have to be disciplined 100% of the time. It's not 99% of the time that you can be disciplined. It's 100% of the time. So there's so much that goes into it, and it's very time consuming and all encompassing. And especially if you're trading crypto, I mean, the market's open 24/7. So it's really hard for me, at least, to like not be paying attention or managing positions at random times of the day if I'm in some swing trades or anything. Because I'll get an alert that goes off like during dinner or something, like, oh, I gotta go check this out. Or inevitably Trump will say something crazy and the markets will like,
Yes.
pump or dump 10-20% in like an hour, and you're like caught off guard. You're like in the middle of something. So, I mean, it's definitely can be stressful. And even stocks, like, man, you'll be like, oh, stock market closes at 3:00 my time. Great. I don't have to worry about it. And then I'll get an alert on my phone. I'll be like, this stock just dumped 20%, what, or, whatever, or things like that. So it's just like, it's definitely more work, and more, I don't know. It's definitely more work than you think initially. And there's just a lot of it's like less trading and more just like background work, like scouting charts, finding setups, waiting for something to happen on a chart with a decent setup, things like that. Like, if people are, I think another good point here too to be made is if you're trading more than not, like, you probably should only be trading or entering trades like 10% of the time when you're actually like doing anything. Like, you shouldn't be entering a trade every day, most likely, because there's just not. If you take a trade every single day of the week for every single day of the year, like, you're probably over trading, because just inevitably there's some days that there's just not good setups because the market's extremely choppy or low volume. So there's so much that goes into it. But it's definitely a lot more work than you think, because you're like, oh, I can just go throw money here and then like go to the golf course for 4 days a week.
It'll magically increase. It'll just magically increase while I'm golfing.
No, because I need to organize my watch list. I need to look for setups. I need to set alerts here. I need to be monitoring my open positions. And then, of course, if you have other things going on, then you're busy with all that too. So then you have to try to find time for everything.
Right. Well, there he is, everyone. NebraskanGooner. He's been around for a while. He's been doing it well, doing it the right way. Gooner, before we sign off here, I wanted to know if you want to share where people can find your work. Obviously on X, you're very active. And what other places you have for people to come and find out and check out what you do.
Yeah, thanks for having me. I've been loving the Daily Trader. It's been great. My website is NebraskanGooner.com. There's tons of free content on there, especially for beginners. That's going to take you to my YouTube, which is also NebraskanGooner, which has hours and hours of free content. I try to give as much
top tier thumbnails too.
What's that?
Top tier thumbnails too.
Yeah,
the thumbnails get me. I love them.
Fresh Prince of Gooner. That's my favorite for sure.
Yes.
But yeah, so YouTube, tons of free content. I break it down very easily to understand for beginners. Everything's geared towards helping beginners understand this stuff. Obviously, if you want to subscribe to my Twitter, you're going to get a lot of extra content. It's only $20 a month. And then, of course, I have some premium services on my website for like a crypto portfolio tracker and a really, really cool indicator called Top Goon X that I made. So those are in the premium services tab on my website. But yeah, tons of free content on Twitter all the time. Tuesdays is chart requests. Thursdays is live stream. So make sure you catch me on there and follow me on Twitter or X, I should say.
Or X, whatever we want to call it these days. Yeah. I think both goes. But we hope you all have enjoyed the episode. Again, thanks, Gooner, for joining us. And I hope you guys will tune in next week. We'll see you later.
Appreciate it. Have a good one. Peace.